Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Friday, April 22nd, 2022. It is 12:28 p.m. Eastern Time. I'm starting the video, so we're about halfway through. I want to go over mainly do an update on the equity markets. I like what I'm seeing so far today, as far as our short case, and then just again recap some of the things that I'm watching and trading, where I think the opportunities are. And that'll be some of the sectors that I've highlighted recently, and I'll just talk on Treasury Bonds, the VIX, and any other recent trade ideas that I've thrown out there to you. All right, so this is QQQ. We had the 60-minute chart. I gave you these yellow lines recently. The most important one on the downside was 335, about 335 and a quarter, and we broke it. So that is a boom. That's what I wanted to see. Now, that's certainly a check mark. That's a sell signal. And what I'm looking for now, and would give me another check, big check actually, if this divergence, which is hanging on by the skin of its teeth right now. Divergence is when you have prices making a lower low and your momentum indicators are making higher lows. That's positive, aka bullish divergence. And so these lines have been moving down. So you can see it's still there now. This is the RSI when I stretch it out, so you can see still at a higher high, but most importantly, we've broken down, and so that's going to increase the odds these divergences do get burned through. Got to respect them when they're there, because again, these divergences are often the catalyst for trend changes. This is what a big part of my trading. It's not everything and everything. Support, resistance, trend lines, divergence, volume, other indicators, candlestick patterns, but I really do like to see these divergent highs and divergent lows to indicate trend changes. So what we need to do, of course, the bulls ideally is reverse soon, very soon, and then also recover. Remember, if they reverse and get an intraday bounce or bounce into the close today, we're on a sell signal, near-term sell signal. It's a breakdown below 335 and a quarter. So we'd have to take that back by a good margin, not just a few pennies. Let's say you got to get up back in here in this box here, this recent trading range, solidly back in there. Until then, view any bounce back to that level is an objective shorting up, and that opens a door for a move to 318. And as I said before, I think if we get near 318, yeah, there'll probably be some buyers that step in there. It's very well support, but I wouldn't really bet on a reversal there. It is anything's possible. I'm always going to say that. I talk in probabilities, not possibilities, because anything's possible. So we try to gauge what's the most probable or likely scenario, and I think that would be it. So we have the big FAANG earnings on deck next week. So again, anything's possible. We're probably not going to see the market do too much until then. Some buyers will probably step in. It may be choppy. It usually is up until those big FAANGs report. Remember, Microsoft and Alphabet on Tuesday, Facebook, PayPal, Qualcomm, Ford on Wednesday. I'm just throwing Ford. It's not really one of the market movers. But Amazon and Apple and Intel on Thursday. And so I gave you my theory yesterday is that a lot of eyes in recent weeks and months have probably been on Facebook and Netflix, and saw those stocks get chopped literally in half, 50 and 70%. Netflix being down 70% off its highs recently, and Facebook down over 50%. And again, I just try to, part of trading and technical analysis, it's kind of like, the art of war, know thine enemy and know thyself, of course, but you want to put yourself in other people's shoes, and knowing that in a bull market, near all-time highs and a very bullish tape, extreme bullish sentiment, it goes without saying that the vast majority of hedge funds and brokers, individual investors and fund managers, they're chock full of things such as the big market leaders, namely Apple, Microsoft, Amazon, Tesla. And so Tesla's already out of the way. They had a good quarter, but again, they're not following through to the upside. Tesla's kind of just stalled out since that great quarter. There it is. So the buyers have are not showing up right now. And again, anything's possible. I don't expect fireworks until we get through next week. But be prepared. And these are what the charts look like. So let me show you most important. Okay, going back to where we were, let's just wrap this up on the indexes, get to the other ideas. 60-minute chart, we broke. We clearly, and you see when we broke it, boom, pretty impulsive selling. That's QQQ 60-minute chart, 335.22 taken out. S&P 500, my number there, the yellow line was 436, taken out. Boom, look at that. And there again, rallies, nice rejection off very well-defined resistance in both QQQ and SPY, and now we're below there. But we hit support on SPY. SPY is still well off the recent lows. And so again, any bounce back to 436 or thereabouts provides objective short entry add-on in my opinion. Whereas at this point in time, next support here is around 429.50 or so on SPY. Need to take that out. I want to show you something on the futures. My favorite trading proxy. This is the Nasdaq 100 futures NQ, and so here's what it looks like. So you had banded here, big resistance up there at about 14,294 with multiple rejections recently. It was support, a lot of reactions there, even to the left of the chart. Smackdown, every attempt, and then finally, this is what happens when a stock or an index has multiple failures. It starts to become apparent to all, and then finally, boom. But look what the boom is. The boom looks a lot like a bull flag. I'm sorry, a bear flag pattern, with that being the flagpole, that impulsive move down right there from here to here. This taking the form of a flag, because remember, you're not seeing that on QQQ because the futures do the round-the-clock trading thing. And so this appears to be a flagpole that has only just broken down today. So what I did is I took that line. If you have a bull or bear flag or bear pennant, bull pennant pattern, take the flagpole, add it to the take the length there, add it to the lowest point, or the flagpole itself, which is that move right there. All right, hard to see, just trust me. That line, I already measured it out. It's the distance there. Maybe I went a hair long on it. Hard to say right there. Yeah, that's it. And then you add that to the highest point. That's what I'm doing. I'm going to zoom in a little so you can see that on the video. And that gives you your measured target. Again, flagpole, lowest point there. You take that and add it to the highest point of the flag, and it gives you your measured target. Now, these things, a lot of times they do play out. Again, is it going to play out in that fashion? I don't know. I think we might get a little bounce here. 5-minute chart has some positive bullish divergence here. I'll show you that. This is kind of my intraday micromanaged position or active trading thing. So you get this 5-minute bullish divergence here. We're pretty near-term oversold. You got the big FAANG earnings next week, so you might see a little bounce up now from that, and that could certainly play out. But again, I showed you levels that would provide objecting short levels, or maybe foil the bearish case. Because remember, these you call it a bear trap if you break support like this, and then you recover that support, solidly recover, and that would be bullish. And it again, most importantly, besides the fact this simple fact that would be a false breakdown, which is bullish if we're recovered, but if we reverse now in those 5-minute charts, say we could, then that would keep these bullish, aka positive divergences intact. So that's what you got. Same thing on SPY. They take the lines right here, add another line. This is our divergence line right here. And there's where we're at. Well, I'll take this and drag it right there. So there it is. You still have that 60-minute bullish divergence. So, hey, as bearish as the last couple days have been, boom, we can reverse, and it's the nature of this game. So, again, if you're frustrated, you're not an active trader, you're going to get whipped to pieces in a market like this. But that's what I'm seeing now, and all I can tell you is that's a breakdown. And unless we make a solid recovery back above those yellow levels, that is the next sell signal, and probably take us down further. Let me show you one other thing. I threw out the VIX as a trade idea recently, and this is what the VIX looks like on the 60-minute chart. These are VIX futures. And you had a divergent low. We've been building divergence, building, and we still have, or recently had put in divergence here, and you can see there's an impulsive leg up, right? That's looks like a flagpole of a bull flag. Remember, the VIX is almost like an inverse of the indexes, because when they drop, the VIX tends to go up. So there's your flag right there. There's your flagpole. I'm going to measure it out exact. I'm going to grab the bottom, come up to about where the top is, about almost a 12% run, add it there. And then that, if it plays out again to the measured target, what it's going to also do is break out a big resistance. See these yellow lines? I've been doing that recently, where you can see the most. You can see a lot of lines on my chart, but the most significant levels nearby, I'll color up yellow. If the line's above, and it's going to be a resistance level, and if it's below, it'll be support. So you have numerous reactions where the VIX, these are the May futures, May contract, has tested that level, and so a breakout above that level would be quite bullish and should open the door for additional gains, especially if that breakout holds. So those are some of the things I'm watching, and leaning that way. I mean, heck, if I was leaning that way yesterday and we took out those those trend line, those support levels on SPY and QQQ on the 60-minute charts, that's only going to firm up that case in my expectations. Like I said, a little work to be done. Take out the divergences, keep these breakdowns intact, and of course it's Friday, so it's going to be to be continued. I don't expect again any huge fireworks today, so we'll pick this up next week, and be interested to see if we see a continued pattern of nervousness, of selling, profit taking. Here, let me show you what I'm talking about. All right, this is what I was talking about yesterday. I'll just go to a daily chart for you here. I talked about the big market leading things. Apple, I mean, the most profitable, largest company, publicly traded company in the world, $2.7 trillion company. Great company. I have little doubt they're going to announce a blowout quarter. They always do. It's almost always a record quarter, record sales here, this, that, one product line or another. Rosy outlook, everybody loves their iPhones and their little iWatches and gadgets and stuff. But again, it's not about that. It's how much of that's already priced in. It's just all supply demand. And again, we haven't broken support yet, but so far, my hunch that we might start to see some profit taken ahead of earnings, because who wants to roll that dice when you're up near all-time highs? Why not, take some profits, take some of that money off the table? Nothing big. One day doesn't make a trend. I say that all the time. I have like a bunch of little Randyisms of things I've made up in trading, and that's one of them. One day doesn't make a trend, but it's something to watch for. And again, it just helps support what I'm seeing here. So work to be done there, but here's Apple down 0.8%, Microsoft down 1.14%, Alphabet down 3.5%. It looks like those folks are getting a little bit nervous there. Amazon down 1.84%, taking out what was and still is an important level here. We had a lot of false breakdowns, whipsaws, but that's still an important level. Why? If I turn off all the lines, get all the noise out of that chart, I'll show you why. This was a level back here. It was big support. It was a multi-year long trading, over a year long, about a year and a half long trading range right there. We broke down, as a lot of things did, but we put in these positive, aka bullish divergences right here. We had lower lows, like on so many things. I'm trying to grab a trendline tool. Big positive divergence, and it led to a rally. But it at almost all points in time, especially in a bull market daily, and we're not even talking 60-minute. This is a daily chart. This is the big one for swing and trend trading, investing even. Usually positive divergences, especially when you're near all-time highs, you're not too far off them, are the catalyst. Now, we still could. That may just be a corrective wave. I'll tell you, the stock is at support. Bulls want to see this, and if they get that, great. This bear market is not, or this bull market is not dead yet, okay? But if they take that level out, they already took it out once with just brief moves. When you go to a weekly chart, these were just, we were there for about a week or so, but we got back above there. So these were just brief dips below, followed by swift recoveries. And so, boom, we take that out, boom. That's all she wrote for Amazon. My long-term targets is bull market trend lines on Amazon. I have one all the way from 1997, since the stock was first came public back then. And it's a well-defined, it's that blue trend line. It's your primary secular bull market trend line for Amazon. And we've got a big divergent high right there. So this is that yellow line I just showed you on the daily. But again, we're looking at a weekly chart right now. Up there, weekly. So if that one gets broken, it takes us down to where we had those two recent lows. That is why it's the yellow line. That is a huge level for me on Amazon. And this is, again, one of the largest companies out there, most widely held stocks, and pretty much the market. If this one takes out, that's about 226.90 or so, and the trend line. And again, we're on a weekly chart, so if you see a solid weekly break, especially weekly candlestick close below there, it's get out of Dodge time for the market. And I don't see Amazon stopping till it comes all the way back down to 2043 or right there roughly, and that'd be a drop from where we're at now of about 30%. The stock, again, one of the market leaders, is already down, or was recently, has already fell about 30% off the highs. So that's where we're at. So bulls want to see this, and if you are a bull, buy. Here's your support levels. We're at one now. You have one a little below. You can scale in, and that's where if you think we're going, these are the levels to buy. So I always say this. I'm going to do my best to give you my opinion if I have one. If I'm a little unsure on something or don't have strong convictions, I'll tell you that as well. I'm not always going to pretend to have an opinion, and I think it's very, very, very unhealthy for those that do. That always have an opinion on a stock, whether it's going up or down, or have a position long or short. That's why I jump from thing to thing. One day I'm talking about pot stocks, the next day I'm talking about aluminum futures, because I go where the opportunities are. If something's not clear, I move on and go to the next one. So this is, and where I'm going with that too is I'll give you the key levels. So you might have a different view on where you think something's going, but where I think my analysis shines and is useful to anybody is identifying very significant support and resistance levels that are likely to come into play. In other words, buyers step in, or buyers exit, and sellers step in if and when those levels are taken out. So it's pretty easy. When if you're a bull, you buy pullbacks to support, especially good support levels with a stop below. If you are a bear, you wait for a break of support and you short with a stop somewhat above. And that's really it. It is that simple. That's what you do. And then you integrate divergences and volume patterns, I should say, candlestick patterns, all that other stuff into the analysis, and that helps to formulate an opinion, bullish or bearish, and tells you whether you should be looking to buy a pullback to support or waiting to short a break of that support. Okay, so that's it. Anyways, profit taking on all those four that I just list. Those are the top four components of the Nasdaq 100. The fifth largest is Tesla, and it's up. But guess why it's up? It's the only one that's reported, right? It makes sense. So there you go. In other words, they don't have to worry about a big earnings disappointment like we've seen on Netflix and Facebook recently. Okie dokie, let's move on and cover on a related note. Since the Nasdaq's tech heavy, I'll roll into the stocks. I've been sharing semis as one of my favorite sectors on the short side, and I'm liking what I'm seeing so far. You have a good support level right here at about 424.60, starting to crack. We cracked it once briefly. I'll zoom in real tight, but we got back above there. So really, it's now a little bit lower. But what I like is this. There was we've been building, like in so many sectors, and the index is positive divergence for a while. And again, this should, and putting that should word in quotations, should be the catalyst for the move to new highs, right? Because that's big daily positive divergence. But so far, and you had the divergence, and I always say this too, guys, divergence is not a positive divergence, is not a buy signal. Negative divergence is not a sell signal. It is merely an indication that a trend change is likely, and then you wait for the buy or sell signal. In this case, your buy signal is a break above the downtrend line right there. It was bullish, big green candle, everything you want to see, but guess what? Boom, they faded it. So far, so good for the bearish case. It's not a false breakout yet because you're still not below the recent lows, but if we start to move lower and then especially take out these divergences down here, by taking out, I mean the indicators take out the previous lows, then that is pretty powerful stuff. And that's because fewer things in trading and investing are more bearish than a failed breakout. Just like a false breakdown or sell signal is a whipsaw is very bullish. So that's what I'm looking for there. And of course the SOX, I gave you targets on the weekly chart. So if we get more and more check boxes, we're going to come on down, hit my first target here. Then if we take out my first target, I think it'll be a very swift move down to that second target down there around 271. So work to be done like everything else. Those positive, aka bullish divergences are still intact. We're still above the recent lows. And I think next week will set the tone because we've got a lot of tech stocks, including some semis, coming out and reporting next week. So that's the semis. I mentioned broker dealers. And this is always never a good sign for the stock market when the brokers start breaking down. $97 is big support. You had uptrend line right here, big bearish rising wedge pattern on the weekly chart. That divergence line should not have been carried over. That should have stopped right there. I don't know what I was doing with that. Okay, that it runs up to the high right there because that's what divergence is all about. Prices making higher highs, indicators making lower highs. Last time we had negative divergence was right before COVID hit. I've said this many times. It wasn't just mere coincidence. Yes, COVID will be always go down the history books, considered the catalyst for that big, and it was the, it's like when you build a campfire. You start out with the tinder and the kindling and all the smaller chunks of wood and hay, whatever you're putting in there, and then you put the bigger wood on top. But guess what? That fire doesn't light itself. You're building it. That's what divergence is. And at that point, you need a match. Boom. When you throw the match down onto the kindling or tinder, whichever one's the first one, forget that was your catalyst, your sell signal, which was a breakdown right there, and it coincided with COVID, and there was a big drop. So now we have the first time since early 2020 when the broker-dealer index dropped 40%. We have the first divergent high, and we've already started moving down below the 200 days, and we're at big support. So your next catalyst or spark will be a solid break. We're already starting to crack it. We're challenging that recent lows. Remember, we had these intraday break, little stick saves here. 1, 2, 3 different candles over the last few months. We're on an intra-week basis. We broke that support, but the buyers stepped in. And each time they've stepped in, the buying is getting weaker and weaker. This is technical analysis. This is what it tells you. We're in a downtrend. A lot of the analysts just haven't gotten the memo. And they're still, bullish for 2022. Just expecting things may slow down a little bit. We may face some headwinds, but this is a sector clearly in a downtrend, lower low. And again, the buyers are stepping in to buy support, but each time, the first time we hit it, they bought it pretty aggressively. Next time we hit it, then not so much. Hit it again, not so much. Now we're below it, about to have the first weekly close below it. There's your short sector. You want to short the individual brokers, Morgan Stanley. Already broke support, been back testing. I like this. There's my target. You got another, even if you didn't take it yet, you still have, I believe, another 33% downside. Charles Schwab. There's my target, 67.40 in the uptrend line. Goldman Sachs at support. Need to take out the support level, 316.65. There's my target. CME Group. Not one of my favorite shorts because it has a nice trend line, some good support here. ICE, there's a big trend line there coming up. If that gets taken out, then probably head a lot lower. Nasdaq just broke out of that weekly bear flag, and I could go on. And if you're interested, let me know, and I'll do this. I think a lot of people, I've done this over the years where it seems the majority of people on the site like the ETFs, and there's absolutely nothing wrong with that. And I'll say this: if you have the time and effort, I can go through an ETF and pick out if I'm bullish on the ETF, and you are, and I can go out and pick the most bullish stocks within there, ignore the rest, and outperform that ETF. Same thing on a bearish side. But if you want to keep it simple, not worry about navigating earnings season and all that, short the ETF. AI has, pretty much breaking down. And I have a 24% drop on it to hit my first target on the weekly chart there, down around just a little above $71. So that's one idea. And of course, the semis I already gave you. Home builders, interest rates. Last week, the Wall Street Journal reported that the average 30-year mortgage had just hit crossed above 5% for the first time in years. I forget exactly when, maybe 2011. Literally 6 months ago to about the other day, about 2 days ago, almost exactly 6 months ago this week, I refied only because the money was so good. I locked in at 2.5, and I got points back on that 2.5. So technically, my APR was a little under 2.5%. So now we're at 5%. And so you talking about putting the brakes. Now I happen to lock in at below the average rate. So I'm not going to say that the average rates haven't doubled. I think the national average was not down to 2.5. But they've near doubled. They nearly doubled. I think it might have got down close to 3 or something like that around that time. And so that puts the brakes on the housing market. And here's home builders. They should be booming. And it's funny because also this week they announced, was it this week earlier, home price sales hit a record high, and that's of course existing homes are selling for a lot because the supply is very low. So in other words, here's what I'm trying to say: if the home builders aren't making money in this market, just like the semiconductors, mentioned dropping my wife off at the Toyota dealership to pick up her car yesterday, and Toyota dealerships usually pretty big, especially one we have here. Parking lot is empty. There's no cars there, so you have this tremendous demand, but they're just just not making the money, and you can see the chip makers are already falling, and home builders are falling. So these are things I look at as cues to the economy. Now look, we're at support. Home builders could bounce here, but they're coming off a big divergent high, and I think they'll continue down. Maybe we bounce, and if we do, this is where I'll be talking about the home builders next, around $66 if we get a bounce back to that resistance, because that was a breakdown there. If we break down here, looks like a little flagging action going on right there, then we're going to go down to that next stop there at 51 or so. So that's home builders. I covered semis. I covered the brokers for you. The pot stocks have fizzled out. I'll mention I mentioned that before. That was when we had that bear market rally going on the Nasdaq 100 and S&P 500, all of which has been faded. I'm referring to the breakout here. We had the nice downtrend line, bullish falling wedge. When this happened, the Reddit group, what do they call them, Robinhood traders, started buying that junk again, AMC and GameStop, and then the pot stocks, and those those stocks with hard fundamentals started to rally. So there was a brief dash for trash, but again, all of that post-breakout rally has been faded now, and then some, and so junk stocks aren't doing well. Which brings me to the other one. I covered the indexes. I try to keep looping back and telling you the IWM still offers or still looks to be one of the most promising sectors. If you want a broad-based sector to short, that's IWM. Already hit my first target there, but this was the big support level that we broke. Been bouncing in this range, and I just wanted to bring this up again. We are right at coming up on the bottom of that. So if we can take out 192 with conviction, that's going to open the door to my second target, T2 down around 171, which will give you a drop of about 11% or so, 11, 12%. TZA is a 3 times short. TWM is a 2 times short ETF for that, or of course trade the futures. And then on that too are the mid caps. MDY, you have comparable level here. They've been stronger. You got a lot of oil and gas stocks in there, but look, this is where I wanted to show you this daily chart. We're right on the line here. See this box? This is where we've been trading. Just like IWM, it had over a year-long, very tight sideways trading range, marked with one false breakout to the upside, or really two there. The second one was lower, false breakout to the bottom, put in positive divergence. Again, this should have been and still could be the catalyst, this divergent low to break out above the top of the range. That's going to be bullish if we get it, especially over that one. However, look how many reactions you have there. This is what I favor. And I think the next time we break it will probably be the last. And then boom, big drop in the small mid caps coming, MDY. About a 21% drop to my target down here around 375 or so. All right, I'm going to skip updating the Treasury bonds because I sent that to you today. I still like those. The downside, I think, is minimal. I'm fine. I even added to my Treasuries today. It's still leaning towards, skewing towards the short end of the curve, the 5 and 10 years, but I'll get some 30-year in there as well. To summarize, short equity, short individual sectors. Closed out that REDU trade yesterday, Rise Education. You had another shot today. It made a full tag of the target. But I always say, over about a year or so ago, I started moving away from what I called adjusted targets, where I'd put the equal sign, meaning I would sit there and go in and calculate the most optimal place to exit a little bit below. But now I just say you can figure that out. If the resistance is at 149, sell a few pennies below. If it was $149, you'd sell it a few dollars below. It's all relative to the share price and how volatile it is. But look, we took it out. So if you liked it and you're in it, there's nothing wrong, even though officially I've closed out the trade. This is, you can just trail it up and let it run, but I'm still not seeing the broad participation in the sector. Some of them are popping here and there, some better than others, but so that one just wanted to update for you. And then Nat Gas, I'll give you an update there. Is right here. No, I need to go to this 3-month chart. There it is. We're at that larger uptrend line. Remember, this one was thrown out as a short here. We took out the first trend line, and we hit the second trend line bounce as expected for a while. Let me tighten it up for you, and you can see. And it's moving down. So this is one that's topped. I told you it was, went parabolic. Seasonality was not in favor, and boom, boom, boom was walking its way down. So you could cover here. We're at one of my targets, 6.734 plus the uptrend line, effectively hit today, close enough. And positive divergence too. So this is a good time to either take profits or tighten up, because what happens, I always say this, and I said it before, said it many times, parabolic uptrends don't end very well. So when you go parabolic, you tend to then have a very sharp fall. So if you want to just periodically lower your stops, give it some room. Natural gas is volatile. There may be more downside. I just do have to point out the fact that you have we're at pretty good support, even a bigger uptrend line. Remember, the longer an uptrend line is, or the more reactions on it, the more significant it is. So it carries a higher weighting, but this one had a lot of reactions too. We broke down. This one had pretty, some decent reactions, and that's it. Now, if these divergences get taken out, just like the stock market, boom, that's going to be pretty damn bearish, and we could see a much bigger drop in natural gas. Maybe all the way back down here to let me see. Just look at this on a 6-month chart, tell you how ugly this could get. Yeah, I would say right about here. If you want to, go shoot for the moon on this one, try to hit the grand slam. There's the blow off top. There's the parabolic run up to the top, trend line break. You could hold out. That'd be a drop of another 23% in that gas if that level's hit, which is about 518. Obviously, you want to step it a little north of that. Although I will say, usually when you get those strong momentum, strong downside momentum-fueled moves, you tend to often overshoot or make a full hit of the targets. When you're approaching a price target relatively slow, or a normal, that's when I like to step in early. Sometimes when you see these, if you get this big, powerful day after day selling in that gas, then I'll just trail stops down and let it run, and sometimes you'll overshoot the target, and then when you hit it, what I'll do is tighten stops right up to it in case, because then you snap back and recover it, and that's usually when the move is over. So that's it. Natural gas. So there it is. Still bearish and short the equity markets, bullish and long gold, silver, treasury bonds, kind of the risk-off assets. I'm on a risk-off trade right now. That is short equities and long treasury bonds, gold, silver. That's it. All right, guys, we're going to wrap it up here, get the video out to you. This has been Randy Finney with Right Side of the Chart. Have a great weekend.